So what to expect next? Okay, this is all nice and wonderful, but what's next? So what's next? Let's see. I'm looking at the weekly chart, right? So we have pretty steep pullback, basically trading at the same level where we started end of January, right? We had a strong rally in January from 52-week lows, and for the past 4 weeks, we're back to the same level, below 50% retracement. We're below 50% retracement between the August high and June low, and we're trading right at this level to the penny. It's all about interest rates. So QQQ and spiders are, very important and interesting, but they don't drive the market. It's the inflation data, right? I'm still in the camp where bond market is right? And this is a hard landing kind of theme, that the bond will lead the market, bond market will lead the market. Soft landing, you basically say, don't fight the tape, unemployment is low, and consumers strong, people are spending money, manufacturing and expanding, so life is good. So bond market is wrong, equity market is wrong. So I'm in different camp. I think bond market is right. So what does bond market tell us? We are trading kind of a make or break the market, right? Not a very straight line, but we are right at the 52-week high, right? We're right at 52-week high on 2-year yield, a little bit longer dated options. We still haven't reached the 52-week high, but we did break through December high, right? Where the market reached the December bottom. And it's trading above that level. So next week, again, a little bit from 4 to almost 5%, right? In a matter of a few weeks. So a little bit too high, too fast. So the question is, will we break this level, right? Will we pull back? Or will we continue going higher, right? Right now, the expectation that Fed will pause somewhere around 5.5%, right? So obviously, if the rates are continuing to go higher, then the market will continue to pull back. If the rates drop, market will will rebound. Similar price action in dollar, right? For the past 4 weeks, you have a strong move to the upside from the 50% retracement. We're talking about multi-year low and decade high, 2 decades high and 2 decades low. And we bounced off of 50% retracement, broke through the 62% retracement, right? Look, if you look here at 62% retracement, we're still trading above 2017-16, financial crisis in Europe, right? That crisis in Europe, COVID, right? Still trading above these levels in the dollar, right? And the strong dollar is not good for the market, right? So again, do we have this parabolic move up, parabolic move down, right? Do we just go in a straight line and continue going? Or do we take some kind of a break, pull back, and then go, right? So those are kind of the two options. Obviously, if we continue going higher on the dollar, market will continue to pull back. If we do have pullback, right, this is scenario 1, scenario 2, right, then the market will rebound. So let's pause that question, right? So let's look at spiders. We are trading at 50-day moving average. We basically broke through the 50-day moving average on spiders. We are testing 200-day moving average. We pierced through the downtrend, right? This is the downtrend from last year, right? From the beginning of the sell-off. Again, make or break the market, right? We're sitting at the 50% retracement between the August high and pandemic low. Which way are we going, right? One scenario, right? 7 out of 10 times statistically, when you have 50-day moving average crossing 200-day moving average, there is a continuation, at least for a few months. And 7 out of 10 times you have this, right? Going into March. All right, so that's scenario number one. 200-day moving average holds, right? Sometimes it appears below that, right? You have kind of a false breakout, right? False breakout, but still, whether we have a breakout or false breakout, you know, this is scenario number one, going into next earnings season, right? This is the most important event because there's still uncertainty. You know, Jerome Powell said soft landing is possible, not off the table, right? Jamie Dimon yesterday came out and said soft landing is possible. We don't have to be in a recession, all possible, right? So that's scenario number one, right? We're heading higher into April. Scenario number two, 30% of the time, 200-day moving average doesn't hold, 50-day moving average doesn't hold. People are nervous, right? People are talking about volatility Armageddon again, that volatility is gonna just spike because everybody's shorting volatility. And then we basically break through the 50% retracement, potentially breaking through the December lows, right? And in April, we are retesting the 52-week low. Scenario number one, scenario number two. This is not just a kind of a hypothetical discussion, right? Just, you know, for the sake of discussion. I mean, we could just be discussing this for the sake of discussion, but this, unless you're doing day trading, right? If you're day trading, you probably don't care if it's scenario number one or scenario two. I mean, you might, but most likely not. But if you hold in position overnight for a couple of days, couple of weeks, couple of months, obviously this is important, right? Are we at least going back to the January highs, or are we going back to October lows, right? The market can go two ways, right? So that's the question. Are we gonna, by April, are we gonna get close to retesting the lows, or are we getting close to January high and, you know, maybe even, you know, August high, right? Which are close. Scenario number one and scenario number two. So let's talk about scenario number one and two by April. April, May. We usually don't try not to time the market to days or weeks, but April, May, you know, going into summer, where are we going to be? Are we going to be at one, or are we going to be at two? And that kind of shit, and that changes everything, right? That changes everything.